The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very good morning and welcome to Squawk Box Europe. You've got myself, Steve Sedgwick. You've got Karen Cho, fresh from, grabbing the president of France and getting answers from him. And Juliana Tattelbaum, who didn't grab the French president, but she'll try harder next time. These are your headlines. So, President Trump says the trade deal with China is done. Wow, that's amazing. Following this week's framework to remove Chinese restrictions on rare earths. The Commerce Secretary, Howard Lutnick, says the two sides can benefit immediately.
Think of that language, right away, very much like the same day. And then as they do that, we'll take off our measures. And we're in a great place with China. Really, really feels good.
But investors give that U.S. and China a trade truce a lukewarm reception, with European equities pointing toward a lower open. Meanwhile, oil prices react to escalation fears between Israel and Iran, with the U.S. pulling some personnel from the Middle East.
French President Emmanuel Macron hails a historic partnership between France's Mistral AI and Nvidia, telling me here at Vivatech the deal marks a breakthrough for technology in Europe.
We are deploying them and we are accelerating. And what Nvidia and Mistral AI announced this morning is a game changer as well.
This is a very big opportunity for the European tech ecosystem because this is a new technology, and when you have a new technology, you have new opportunities.
Wow, can we do a better show today? I don't know. We had Orchel, we had the Goldman Sachs event in Berlin, we had Vivatech. If only we had comments from a top European politician on the global trade situation, then we'd have it all.
If only.
If only. Did someone grab him and did, as we expected her to do so? Well, you'll have to find out in 2 minutes' time. In fact, she did. Yeah, there you go. There's the reveal. President Trump, though, says the trade deal with China is done. That was quick, amazing. Officials appearing to have revived a trade truce after 2 days of tense negotiations in London that Juliana was at sporadically. The contents of the deal, which still need to be approved by both presidents, provides a framework for removing restrictions on Chinese exports of critical materials. Speaking with our colleagues, fresh off his London visit, that's great access, isn't it? The U.S. Commerce Secretary Howard Lutnick hailed the progress made on rare earths.
They are going to approve all applications for magnets from United States companies right away. Think of that language, right away. Very much like the same day. And then as they do that, we'll take off our measures. And we're in a great place with China. Really, really feels good.
Now, China is reportedly putting a 6-month limit on export licenses of rare earths as it looks to maintain leverage over further trade negotiations. The Wall Street Journal says Beijing is working to retain its position of power in the supply of critical minerals, according to people who consult with Chinese officials. Meanwhile, President Trump says he will update trading partners on unilateral tariff rates within the next 1 to 2 weeks ahead of the current July 9 deadline, saying they can either, quote, take it or leave it. At a hearing before the House Ways and Means Committee in Washington, Treasury Secretary Scott Bessent signaled a little more willingness to move the goal line beyond the July 9th deadline.
It is highly likely that those countries that are negotiating or trading blocs, as in the case of the EU, who are negotiating in good faith, we will roll the date forward to continue good faith negotiations. If someone is not negotiating, then we will not.
Meanwhile, I caught up with French President Emmanuel Macron right here at Vivatech and asked for his reaction to the trade framework deal reached between the US and China.
I think whatever will help to stabilize this world and to go to a zero for zero tariff will be a good thing.
Does it mean good news for European breakthrough?
I'm sure that we will find at the end of the day a good solution.
So a couple of days of London weather, it seems as though negotiators are pretty keen to get a deal done and hop on a plane and go back home. But the reality is that China may be the undeclared winner here. It's talking about trying to build more trust. And what I can hear from this technology conference here, and don't forget tech is the real engine of growth for a lot of economies, that many are now looking at avenues where they can rebalance their own economies away from the United States. And the whole conversation about US and China was about the US rebalancing its own economy away from the Chinese economy. But there have been ripples across every different economy in the world. And yesterday I caught up with the Canadians and they were talking about trying to bolster their technology sector, no longer relying on traditional industry to sell into the United States. So you've seen the wheels set in motion now where a lot of countries are trying to step up their game, and clearly technology, which as Nvidia was talking about recently, is not just technology, it's infrastructure. And you know a lot of governments over the years have been very keen to bolster infrastructure. So I think that's where you're now seeing the consequences of this U.S.-China negotiation that has really stretched across all partner nations really come to the fore in Europe, where we're talking about strategic autonomy that's not just defined as defense and German infrastructure, it's been defined as technology these days.
Well, I think, Karen, tying to what you just described as, such a critical piece here of what's going on across the world is how much this latest episode between China and the U.S. has emphasized how much leverage the Chinese have here on these rare earth metals. And just coming back to the news flow we have had over the last 24 hours with Howard Lutnick talking up how positive the U.S.-China trade talks have gone, and that the fact that he says these rare earth export licenses are going to be granted immediately. The FT is already reporting that when it comes to these license approvals out of China, that companies are being asked to provide sensitive information, and it's already raising concerns around intellectual property theft. So it's hard to sort of believe that things are as positive, going as smoothly as Howard Lutnick suggests when you have reports like this one out of the FT coming through already.
Is it win-win? We've been told it's win-win by the administration. Well, we're yet to see. The truth is, in the data, and the CPI data yesterday was so important, everyone was poring over it to see any damage from increased prices on the consumer price index and what that will mean for interest rates further along the road, and what it means for the bond markets, and what it means for absolutely everything. There was zero evidence yesterday and I've looked at 4 different investment bank reports, that there was damage done yet from the trade situation. But surely investment decisions delayed, price increase, because I heard nothing yesterday from Lutnick, Besant, Trump, or from the Chinese about surely the key issue. Rare earths is almost like it's a sideshow compared to the big issue. The Chinese still have 30% tariffs on their goods. The Americans still have 10% tariffs on their goods. Where is this coming through into the real world, into the US economy, into extra income? We just don't know. So great if we can have a rapprochement. I wonder what Macron would call the word rapprochement, because I don't know what the French is for it. But if we could have a rapprochement between the Chinese and the Americans, this is brilliant. It's great for all of us. But surely there must be some ramification, Karen, from the increased tariffs, the increased distrust, the problematic relationship going forward. And trust isn't going to be necessarily there, is it, given everything that's happened?
Exactly right, Steve, and that's to my point around the consequences for other nations. I mean, you think about the first negotiation, it was in Geneva, international hub, the second one in London. I don't know who angled for these to be international conversations, but the reality is it draws in a lot of other nations who have been going through very torturous negotiations themselves. And I do think now, after we've gone through the last number of years of this forming a club of allied nations in lockstep, particularly around technology, but common interests as well, they're on side with the United States, and China was out in the cold. That is now changing because countries are saying, look, we cannot simply just rely on selling into this gigantic market of the United States. We'll just shut China out, or we'll de-risk away from China with that China plus one policy. Now countries are saying, well, we need a US plus one policy too, which means almost reverting back to selling more into the Chinese market. And don't forget, there was a big change that also came from technology world, which was DeepSeek. The fact that you've got this cheaper technology coming out of the Chinese Chinese market, that a lot of countries are saying, look, we can build AI infrastructure on the cheap, we can build out AI at a much lower cost base with less compute power, versus the US alternative, which has been really based around Nvidia chips. Don't forget, we don't need to spend as much money and rely on those US partnerships. So again, there's a lot of moving pieces. That means we're not just talking about the US and China relationship here, we're talking about China trying to expand its outlook to other trading partners again, using this moment of opportunity. And the US, which has been so single focused on tackling the Chinese market, I think there are consequences for it in terms of its other relationships that have been so strong in recent years. Those relationships have been damaged by the negotiations that have taken place to this point, in my view at least.
With so many moving pieces, as you say, Karen, and just coming back to the point about tariffs, Stephen, the fact that we are still looking at 30% tariff rates, 10% tariff rates here. And Howard Lutnick yesterday, when he was talking to Money Movers, our colleagues over in the U.S., he said if the current U.S. tariff rates on China are not going to change, he was asked if they're going to change, and he said you can definitely say that they are not going to change. So suggesting that the tariffs are here to stay.
How can that not have an effect on China-US trade flows, on consumer price inflation over a medium term? It hasn't shown up yet. Fact. There is no data in the CPI that really conclusively say we've got a problem now because of the tariffs. But how can that not? A 30% increase in costs across the board with your biggest trading partner. Well, I think we've got to leave that question there, because I tell you what, some of the ramifications for everything going on are affecting other economies as well, including the United Kingdom. This data is a body blow to Rachel Reeves, who gave a great set-piece spending review yesterday, and we talked about it with the excellent Ian King yesterday on this one as well. UK GDP up 0.7%. 3 months and 3 months, which is pretty much in line with expectation. But the UK Finance Minister Reeves is saying the numbers are clearly disappointing, because actually the April figure doesn't look good. Negative 0.3% month on month, as opposed to the poll, which was going for negative 0.1%. GDP output in April up 0.9% year on year, which has slipped below the 1.1% that Reuters had expected. Let's just go through this as well. This is a government that has set its stall out on reviving growth. And growth, if anything, has been anemic since. Now, I've specifically asked UK Governor of the Bank of England, can he see the measures that the British government are doing coming through into their longer term growth predictions? Don't forget, the Bank of England looks out 1 year, 2 year, 3 year. And as such, it is very difficult, even on a 3-year time frame, to see the benefits as of yet of the UK government measures on UK broader growth. And this is what it's all being pinned on, because the spending commitments that Rachel Reeves outlined yesterday, in addition to what she's already said in the autumn budget, means that this is a government that is spending a lot of money at the start of the parliament, at the start of the 5-year parliament, and they are hoping that the growth comes through so that the debt profile isn't too damaged later on in terms of debt to GDP and what the government's got to pay for its financing towards the end of the period, when, of course, they have to go to the country. I hope I've explained that okay, and we'll go back to it a little bit later on. In the meantime,
G7 leaders will reportedly forego a joint communique at next week's summit in Canada. That's according to people familiar with the matter. Speaking with Bloomberg, leaders will instead opt for various standalone statements on different topics in an effort to avoid stoking tensions, particularly with the U.S. Let's get you a check on markets and what's in store for the open of trade this Thursday morning here in Europe. We're looking at a pullback at the open. The Xetra DAX looking to open about 0.8% lower at this early hour. The FTSE MIB, the CAC 40, the FTSE 100 also looking at a pullback today. This following a retreat for European markets yesterday, which saw the Stoxx 600 fall by about 0.3%, its third negative session in a row. In terms of U.S. futures, this is what's in store for the Wall Street Open. We are looking at a pullback there as well. The Dow Jones looking to drop about 140 points. The NASDAQ and the S&P 500 also looking at a weak start to trade this morning. Coming up on the show, our coverage from Vivatech in Paris continues as French President Macron hails a partnership between Nvidia and one of Europe's AI champions. Plus, Chancellor Rachel Reeves announces the details of her spending plans, boosting health and defense budgets, but leaving some ministers disappointed. We'll get the opposition's reaction with Shadow Chancellor Mel Stride at 7:30 London time.
French President Emmanuel Macron has been here at Vivatech. He was joined by Nvidia CEO Jensen Huang and Mistral AI CEO Arthur Mensch on the stage at Vivatech here in Paris, hailing a partnership between the two companies as a game changer, saying it would strengthen the country's AI sovereignty and allow them to do more. We've been having a lot of conversations here, and I also sat down with the Mistral AI CEO Arthur Mensch and asked how significant that partnership is for his company.
It's quite significant because managing GPU is actually a fairly complex thing to do. And so that's an expertise that we've built for the last 2 years, but we've been working with Nvidia for that time about how do you co-adapt the model deployment to the chips that you're deploying onto. So having this partner as a tech partner is actually super meaningful, and it allows us to go faster and to offer the best services.
The Nvidia chips do not come cheap, somewhere between $30,000 to $70,000 per chip. Some are already speculating about a fundraising for Mistral AI to the tune of $1 billion. Is that now necessary to fund this expansion?
So we have a lot of contracts and offtake that we use for funding our effort. So effectively, this is more than $1 billion in capex in our first tranches. But we are not currently fundraising at all, but because we've been able to basically fund, once you have contracts, you can fund it through debt financing, and you have multiple financial instruments to do it.
So fundraising is not essential at this point?
Fundraising is not essential, but fundraising might come given the demand that we are having.
Joining me now, I have a guest for you. Thomas Dohmke joins us, the CEO of GitHub. You've been in partnership, a subsidiary of Microsoft since 2018, but big in the developer platform space. You were part of the exclusive club that went to the Elysee Palace last night, and no doubt that conversation that was happening on the ground here on stage yesterday about Europe having strategic autonomy in technology continued last night. What did you hear, and where are we at with that discussion for technology?
Excited to be here. Really lots of discussions last night about Europe bringing research and funding research, scaling the infrastructure here, making sure that European companies can spend a part of their budget with European companies by AI here within the continent.
What seemed to be different this time is that you've got some of the funding and the backdrop. You've got debt, you've got equity, and Arthur Mensch was talking to me that if you get the contracts, you can get debt financing, which is really interesting. You don't just need to rely on private equity anymore, but the government feels like it's declaring all these initiatives in the backdrop as well that puts money behind some of the startups. Would you agree that there's real power momentum for technology in Europe?
Absolutely. I was here last time 2 years ago, and it clearly feels now that Europe has woken up, that everybody has realized, Europe needs to become a powerhouse in software development and in AI.
Talk to us about some of the conversations you're having here about the technology and where it's going. What's the hot topic this year for you?
The hot topic, obviously, for us at GitHub is software development and tools for software developers. And what we're seeing is that AI agents, are writing more and more code. In fact, we believe that soon enough, agents will write 90%, maybe even 99% of all the source code, and developers will become the operators, the conductors of these agents.
Two takeaway messages from that, it seems, is that we don't need as many programmers if the code has been written for them. Number two, it means it's much quicker in terms of the development of some of the platforms.
I think we will have more developers, not less developers, because the complexity of these systems built by AI, will need even more people looking at what has the AI done. What is the source code written by the AI? Is it actually aligned with my business outcomes, with my security posture? What I want to build? Is it providing a great customer experience? The agent cannot be the one that judges what we actually ship to our customers. And the complexity of software has continuously been rising over the last decade or two. And so we will need more developers to look at all these AI models, to judge whether they are doing good work, and to ultimately build and manage these complex systems.
That complexity is really interesting. I heard a comment here, which is that AI will help us to become more human again. And the reality is, for most consumers, they've been plugging in things to a search engine that are very much like talking in computer language. AI is meant to change that because they're trained on large language models, so we become more human. Do you think that is what the future looks like?
Yes, because the thoughts in our heads, they're all in human language. They're in English or German or French here in Paris. They're not in computer language. They're not thinking in computer language. So the job of the engineer is actually to take that human language and convert it into computer language and programming language that then runs in a machine. So now AI builds that bridge. AI agents will help us to go from idea to concept, to prototype, to real product much faster. And that also means that products will become so much more complex.
When we're talking about languages in Europe, this was something that came on stage last night with Nvidia Jensen Huang's conversation, saying, why would you outsource AI to other countries? This is your culture, this is your language, which really made me think about the fabric of society. If AI is going to be so embedded in everything we do want to retain some ownership so we can preserve our culture. How important is that? And how are you thinking about how this actually plays out in real time with AI being so invasive in future?
I think it will play out as a mix of both a global developer community, millions of developers working together on open source projects, on AI projects, and localized companies that are building on top of that stack, that open source, that AI stack, to ultimately benefit their country, their community, their business partners. And Europe needs to have that moment where they realize they become a software society, a society that's building software technology as much as the United States has become that over the last 20 years.
When we're talking about the US, the biggest news about your company so far this week has been an alleged data leak. Effectively, the Trump administration plans to roll out AI across the US government on Independence Day, which says a couple of things here about how integral your platform is to developing software. But number two, do you need to rethink security as well?
We have been, thinking about security at GitHub for a long time. We have a very strong security team protecting the platform, protecting our customer source code, making sure that the products that our customers are building are secure. And AI will play a huge role in this, finding new vulnerabilities, alerting developers much earlier in the life cycle when developers, before they're shipping the code to customers, finding the security vulnerabilities, and ultimately, making all of our products more secure.
If this leak is in fact genuine, and if in fact we are talking about some sort of US government rollout of AI throughout to government departments, that suggests AI at scale. Is AI coming at scale?
AI is already here at scale. If you look
That's not what I heard from Manpower yesterday.
I think AI is here at scale when you look at software development. When you look at our journey with GitHub Copilot, we started 5 years ago in 2020 building GitHub Copilot. We built autocompletion, we built chat, and now here in 2025 we're building coding agents where you just assign a task to them, the agent goes off, it does all the work, it comes back and then asks me as developer to review the code, to make sure it aligns with all my company values, compliance, postures, all these things, and then click the button and say, now it's ready to be deployed. AI agents, if you will, are becoming the application layer of AGI.
Talk to us about the evolution of the landscape here, where we've been very much dominant by US tech to the point where you're a subsidiary of Microsoft as well. Does this change now on the next wave of technology? Do you think we see more very large companies from Europe in technology? Is that a natural state of affairs? That's
certainly my dream as being German and being half European and half American, that we're going to see more technology companies here in Europe, in India, in Brazil, anywhere else in the world. A kid today should be able to become the founder of the next Microsoft or the next Google or the next Meta, and I think agents and Copilot will enable that because it democratizes access to technology. All you need today to build a startup is a laptop, a prompt, and an internet connection to build a quick prototype and to implement the ideas that you have in your head into reality.
The backdrop that we're seeing here, though, is one where it's still complex for a lot of these startups to get going.
Yes, yeah.
What's it going to take to see your company realize the ambitions that you want to achieve, and for others around you?
The obvious challenges here in Europe are the ones that I'm sure others have mentioned too. Is the regulatory environment is complicated. Founding a company is very complex. In Germany, you have to go to all these notary offices and get all the signatures and all that. And then funding at scale is still really hard to come by. And so I think Europe needs to build, the grounds for all the plans to grow really fast. And there's still more work to do on the politics side, but also on the private equity, venture capital. All these folks need to wake up and look at this market, at this AI market, software development market, in the same way that the folks in the Bay Area have been doing for a long time.